Hello, good morning. You're watching Market Cafe on ET Now with me, Vinny Motiwala, along with me, Sneha as well. Sneha, a very good morning to you as well.
Good morning.
And viewers, this is a show where we will take you all through everything that you all need to know before you all start your market day at 9:15 a.m. But what should you be prepared for? What stocks? How was the global markets? All that is what we'll cover in the next 1 hour. Sneha, let's start with the global markets then. And doesn't seem like too much of an excitement that has come in, at least from the US market close at least.
Absolutely, Vinny. Not much to worry about, but still they did not end in the green. In the red, but like I said, not much to worry about. Minor falls coming in for the US markets. Now, stock futures were near flat last night as investors analyzed the fresh batch of corporate earnings and attempted to look beyond the latest inflation reading. In after-hours action, software provider Adobe dropped nearly 11% on the week sales guidance that they had given. Beauty stock Ulta slid more than 6% after its full-year earnings forecast largely underwhelmed analysts. Those moves follow a losing day on Wall Street. The Dow slipped more than 100 points, or about 0.4%, to snap a 3-day winning streak. The S&P 500 and Nasdaq each fell around 0.3% each. Now, yesterday's retreat came after February's producer price index, a gauge of wholesale inflation, advanced more than what the economists had anticipated. Bond yields also climbed in the session, with the benchmark 10-year treasury reaching 4.29%, as investors wondered if the recent economic data was too strong for the Fed Reserve to loosen monetary policy. Despite the leg down now, the Dow and S&P 500 are still tracking to end the week around 0.5% in the green, while the Nasdaq is on pace to add 0.3% on an overall weekly basis. All three indices are also higher when you look at it on a year-on-year basis. And well, today investors will be watching out for the economic data on topics such as consumer sentiment, import price, and industrial production as well. So that's largely the moves coming in from the US markets. But with that, let's also take a look at what Europe is doing. And European markets closed lower yesterday as investors assessed another key US inflation reading. And the Pan-European Stock 600 index closed just 0.2% in the red, shedding all the morning's cautious gains that it had accumulated. Media stocks ended the session 0.7% higher. Mining stocks, however, were the biggest losers, down 1.5% yesterday. When you look at the individual indices, you have DAX that was down almost 0.1%, rather flat, but with a slight negative bias. FTSE down 0.4%. CSE 40, that one was the only index among the European markets that ended the day in the green, up 0.3%, and stock 600, like I mentioned, down 0.2%. So Vinny, rather subdued, if I could use that word, for the global handover coming in. Not too much to worry about, but well, yes, not a lot of sectors in the green anyway.
Absolutely, subdued, and maybe I think that's what will continue even for the Indian markets. Maybe we could be in that. Though the yesterday we did recover from.
Absolutely, yesterday was a good day for
from Wednesday's freakiness was something that at least we saw recovery there. Hoping not a freaky Friday at least coming in for the Indian markets. But let's move on and talk about oil prices. How are the oil prices doing? What is Brent crude oil doing as well? When you're looking at Brent crude oil prices, this morning seems like a bit of a subduedness here as well. Brent crude oil prices currently at around $85 per barrel mark is what Brent crude oil is doing. WTI crude oil $81 per barrel mark. And obviously some of the factors that one should keep an eye out for crude oil prices seems like a slight bit, at least after falling in overnight trade, we're seeing a bit of a recovery, a bit of a green coming in for the oil prices as well. And what is the reason for the increase in oil prices? Let's not forget US crude oil stockpiles that increased, that overall demand is improving, demand is strengthening, and that is possible. Maybe we could see some bit of a supply issue that could come in terms of Ukraine side, Russia side. Those issues still continue, right? So there is higher demand now. But supply, maybe if there are concerns that come in on the geopolitical front, that could be an issue, and that is why a slight bit of an uptick in terms of the oil prices that we have seen. All those attacks in Ukraine and Russia that are going on in terms of the refineries as well as some of these concerns that come in for the crude oil prices. Now, other than that, obviously, let's look at what gold prices are doing as well. Safe haven commodity gold prices, slight bit of a green coming in, not much of an uptick there. $2,168 per ounce is what gold prices is trading at. Yields are firmer, US yields are firmer, US inventory data, inflation data, all these points are coming in as well. So gold prices, a slight bit of an uptick that we're seeing there, not majorly anything of an up move. But yes, that's how commodities are doing this morning. Sneha, let's keep an eye out on how that also pans out. A lot of geopolitical tension that there's. Sometimes we're talking about Red Sea issues again. Yes. We're talking about Russia, Ukraine. there's, concerns that come in and affect all these prices as
Especially after Ukraine struck Russia's oil field.
That is
biggest one. That was the biggest reason we're seeing volatility.
Concern actually came in on
Absolutely.
the back of that.
Yes.
But that's something that one will have to keep an eye out on. That uncertainty is going to be there on the back of geopolitical.
Absolutely. So, Vinny, we'll see how this pans out for oil prices, WTI as well as Brent. But with that, OMCs have revised petrol and diesel prices across the country after a year. Now, the prices of petrol and diesel have been slashed by 2 rupees per litre and will be effective from today. My colleague Prakash is here with more details on this. Prakash, good morning. Give us more details on this.
It's a big development coming in, and the confirmation of our news break as well as the world marketing companies have revised petrol diesel prices after a gap of more than a year, where the petrol diesel prices have been reduced by rupees 2 per litre effective from today. A very significant development coming in just ahead of the parliamentary election, where the election commission is likely to announce dates for the parliamentary election in a day or two. Meanwhile, a much needed relief for the consumer. However, situation is favorable for the oil marketing companies as their combined profit stands at around rupees 70,000 crore in last 3 quarters. Along with that, crude oil prices in a range bound for quite some time, and when it comes to under recoveries of the oil marketing companies, they are under control. In fact, they are making profit on sale of petrol, but they are facing some under recovery on sale of diesel. In fact, they are making profit on sale of diesel as well since last month. The situation is under control for the oil marketing companies, but their freight charges have gone up due to Red Sea crisis. That will be very interesting to see as oil marketing companies will continue to give benefit to the consumer going forward, or it will be one-time benefit. Meanwhile, good thing is that benefit has been passed on to the consumer. Petrol diesel prices have been reduced by rupees 2 per litre by the oil marketing companies.
Okay, thanks so much for that, Prakash. But Soumit is standing by with us, and Soumit, now these fuel prices have been slashed. But what does it mean for these OMCs? How does it impact them, the oil marketing companies?
Well, if you see, it's a triple whammy for the oil marketing companies. Firstly, given the fact that petrol and diesel prices have been cut by around 2 rupees per litre. Apart from that, Brent crude prices have surged back to $85 per barrel level because of lower US oil inventory and because of the attacks that we had seen on the Russian refinery. And the third factor that is negative for the oil marketing companies currently is the fact that Singapore gross refining margins have been trending lower on a sequential basis. Now, who will bear the brunt of this? Well, it will be Indian Oil Corporation, HPCL, BPCL as well as Reliance Industries. Now, because of this cut of 2 rupees per litre on petrol and diesel, the gross marketing margin that the oil marketing companies earn by selling every litre of petrol and diesel, that would come down. For petrol, it will come down to around 5.4 rupees per litre, and for diesel, it will come down to around 1.4 rupees per litre. And do remember, theoretically, every $0.5 per litre drop in the gross marketing margin lowers the annual EBITDA for Indian Oil Corporation by around 7%, for BPCL by around 8%, and for HPCL around 11%. So the impact of this lower gross marketing margin or the cut in fuel prices will be felt more by HPCL. Apart from that, if you see earlier, the Prime Minister had announced the cut in LPG prices as well by around 100 rupees per litre, and with this cut of petrol and diesel, nearly 75% of the total volumes that the oil marketing companies have seen a price reduction in the last 10 odd days. Apart from that, if you see, the Singapore gross refining margins have been on a declining trend. In December 2023, they were at around $6.7 per barrel. Post that, they surged to around $8.7 per barrel in the month of January, but have now come down to just $6 per barrel level in the month of March. And the impact of this, again, every $1 per barrel drop in the gross refining margins it lowers MRPL's EBITDA by around 1,000 odd rupees. For Chennai Petro, it lowers their EPS by around 30 odd %. For Indian Oil Corporation, BPCL and HPCL, it decreases their earnings by around 14 to 16%, and for Reliance Industries, it impacts the consolidated earnings by around 4 to 5%. But when it comes to the petrol and diesel price cut, what now needs to be seen is that is this just a 1 quarter impact for the oil marketing companies, and how crude prices trend now going forward. Now they are currently at $85 per barrel. If they increase further, then the gross marketing margin for the oil marketing companies could take a further hit going forward.
Samit, thanks so much for taking us through that. So OMCs and the stocks like IOCL, BPCL, HPCL, Chennai Petro, Reliance, all of these will be in focus today on the back of that. But with that, let's take a look at all the important events that we need to be watching out for today. And globally, you have the industrial production data coming out of the US, so watch out for that as well. Let's shift focus back home and talk about some corporate action. Today is the last day to be eligible for dividend and to buy stocks for IIFL Securities, Kirloskar Ferris, as well as SBI Life. It's also the ex-date for the HCC rights issue, and today also happens to be the ex-date for the Gujarat Ambuja exports bonus issue in the ratio 1:1. So these stocks will be in focus today, and Vari Renewable Technology stock split will be happening from 10 rupees to 2 rupees today. So well, watch out for all of these stocks in today's trading session as well. Lock-in period is ending for two recently listed companies. You have Ratnavir Precision as well as pardon me, you have Ratnavir Precision, 45% equity coming out of that stock, and EMS Limited, 53% equity coming out of lock-in today. Big move, so well, watch out for both of these stocks as well. And when we take a look at other key events that could have an impact on our markets today, the most important one is the FTSE flows on addition and weightage. Those changes will be taking place today in the FTSE index, so watch out for that. Today is also RBI's deadline for Paytm to shift their UPI business to other banks, and Paytm FASTag users will also be switching to another bank. They're switching their FASTag to another bank, so today is the last day to do that. So do that if you haven't done that still. And well, the stress test disclosure for small and mid-cap funds will be declared today across a whole plethora of mutual fund houses. Lots of important data will be trickling in, so we'll be watching out for that as well. Today is also the deadline to pay your advance tax, and when we talk about what's happening in the political space, PM Modi will be kick-starting his Karnataka campaign today. Presidential elections will be taking place in Russia, and the Bank of England will be issuing an inflation survey today as well. Lots of important cues to watch out for today. Well, Winnie, Friday. Indeed, but lots of action happening, so I don't think it's going to be an easy Friday.
Exactly. Like a busy Friday that is there, at least in terms of the events fronts. Let's keep an eye out on that. But let's talk about some of these top important stories and global cues that one should keep an eye out on. Now, the global macros continues to be the cause of concern as inflationary concerns loom large. Wholesale price accelerated at a faster than expected pace in February, and just another reminder that inflation remains a troublesome issue for the US economy. The PPI for February rose by 0.6% month on month, way past the street estimate of 0.3% in January. Now, on a year-on-year basis also, when you're looking at it, the headline index increased 1.6%, the biggest move we've seen since September 2023. So yes, those commentaries saying that we see keep coming around the US inflation, that continues, and that's what it's proving the point as well. Everyone continues to be remain more cautious in terms of inflation. Let's just not take it for granted that before you actually see it coming to that mark, start taking rate cuts. They are always cautious when you see global commentaries on that.
Right, and on the back of that also, now people in the US are a little dilly-dally about when the Fed is going to actually cut rates.
Because they're saying wait, do not rush into it, because if you rush into it, cut the rates, and again you start seeing a run up, that's more of a worry for inflation.
It's going to reverse the Fed's entire effort that they have been doing
making
so
for
much
these last year and couple of years. So that's a concern that's there.
Well, yes, so we'll be watching out for that on that front as well. But let's shift focus and talk about some stock-specific action then. Shares of Adobe were seen slipping in after last trade. This after the design software maker issued a strong Q1 but delivered a mild miss on quarterly revenue guidance. The company's top line grew 11% year-on-year for the quarter ended in March.
Let's talk about Hyundai and the sister company Kia, which will recall around 160,000 EVs in South Korea over problems with the software in the changing systems. Errors have been found in the charging control units used in Hyundai and Kia EVs, which could make it difficult to power a low voltage battery. Meanwhile, Hyundai Motor America will also be recalling 28,439 vehicles in the US as a possible oil leak may increase the risk of an engine compartment fire, and this is according to the NHTS.
Alright viewers, with that it's time to slip into a short breather on this edition of Market Cafe. But you stay tuned, because when we return, we'll take a look at how the Asian markets have opened up this Friday morning, so you stay tuned.
Welcome back. You're watching Market Cafe on ET now. It's time that we start seeing what the Asian markets are doing and how they have opened up as well. Clear subduedness, actually a weakness that we've seen in the Asian markets when during this opening day as well. And obviously this is coming in, the pressure is coming in the Asian markets. Why? Because we're seeing a hotter than expected US inflation data that came in. So that's keeping a bit of a pressure on the Asian markets as well. Also, sharp rise that we're seeing in the US bond yields. The dollar for the previous day is also on the back of a yet a bit of a subdued volatility that we're seeing in the dollar prices, that is causing a bit of a concern. The rise in the dollar prices causes a concern even for the Asian markets as well. When you're looking at it in terms of the Asian markets, how they've opened up as well, let's just look at what we're seeing in terms of ASX 200. That's down 1.3%. We have Nikkei, that's down 0.3% as well, almost approximately at 0.3%. While in terms of Kospi, also trading with sharp cuts of almost 1% that we're seeing there as well. Hang Seng, Shanghai, both of them have opened up in the red as well. Hang Seng is down almost 1%, while Shanghai is down 0.07%, a mild subduedness on that front as well. Let's look at why Japan is also falling, because they're expecting some data points that will be coming out in Japan as well, and this is going to be in terms of the wage concern. So yes, keeping an eye out on the data point that will be coming out from Japan as well. Obviously, the country's finance minister had recently said as well that they are no longer in a deflation, but surely keeping an eye out on that one. As of now, clear subduedness is what we're seeing from the Asian markets. Nothing exciting that is happening there as well. Nifty implied open also indicating a bit of a negativeness now that one could see for the Indian markets as well. So let's keep an eye out on that. Clear subduedness is what is indicating, at least for the Indian markets.
Well, absolutely, Vinny. Let's hope we have a repeat of what happened yesterday, but one can only hope to see that.
Welcome back. You're watching Market Cafe on ET now. Let's get more domestic and more stock specific on the domestic front. We spoke about OMCs, but there's another couple of stocks that one should keep an eye out on. Biocon and Eris Life. Why is that so? Yesterday there was a news flow that came in that Biocon, on the back of the long-term agreement with Eris Life, is something that we're keeping an eye out on. What more are the details for this? Valuations, contours of the buyout? Let's go across to Shrishti, who's joining in with us.
Well, yes, Biocon is in focus as the company has inked another deal with Eris Life Sciences, because back in December 23, we did see Eris Life Sciences buying out the Nephro and the Derma division of Biocon Biologics, and this time they will be buying a portfolio of 3 products comprising of metabolics, oncology and critical care products in India. This particular deal value is being valued at 1,242 crores, which is happening at a multiple of 3.4 times of their revenues and 18 times of EBITDA. Multiple is what the company has given the value of this particular deal. This will be on a slump sale basis, where Biocon Biologics is going to divest their portfolio of these 3 products, and this transaction is expected to get completed before 15th of April. And they have also signed a supply agreement for 10 years and 430 people associated with the business will also make a transition to Eris Life Sciences to ensure the continuity for the employees as well as the patients. In comparison to the earlier deal that I was talking about back in December 23, if we compare the valuations, so the earlier deal back in December 23, that was done at a 4 times multiple to the sales and at 22 times multiples for the EBITDA, where the company did divest 2 of its products at a price of 366 crores. This particular deal is valued at a little lower, but nevertheless, this is seen to be as a positive move for Biocon Biologics. Why so? Because the company has a lot of debt, around 17,000 crores of debt is what the company has on their books, and with this slump sale, I'm sure there could be some relief coming in for Biocon Biologics. Back to you.
Shrishti, thanks so much for taking us through that. We'll see what the impact of this announcement is, because this announcement did come in the last few minutes of trading session yesterday. So both Biocon and Eris Life will be in focus today. But another stock that will be in focus today has to be Paytm, because the National Payments Corporation of India, which is the NPCI, has now allowed 197 Communications to act as a third-party UPI app under the multi-bank model. Now, several banks have been appointed as the payment system providers. My colleague Anurag Shah is joining in with more details on this and the names of the banks that have been allowed to do so with Paytm. So, Anurag, take it away.
As deadline for restrictions on Paytm Payment Bank will kick in from 15th of March. So, just before that, National Payment Corporation of India has given third-party payment application provider approval to OCL, that is 197 Communication Limited, parent company of Paytm. So after this, now the UPI disruption will not happen because there are millions of UPI users of Paytm are associated with the Paytm bank, but they were able to do the UPI transactions under the license of Paytm Payment Bank. So restrictions are kicking in from tomorrow. So now the Paytm has got the TPAP license from NPCI, so for the UPI service will continue, and other than that, 4 service provider bank also been associated with Paytm, that is Axis Bank, State Bank of India, HDFC Bank and Yes Bank. So all present Paytm UPI handles will be redirected to Yes Bank. So for existing merchants or new merchants acquirer, all will be directed to the Yes Bank. NPCI has also advised Paytm that if somebody want to migrate to other bank, they should help it, and they should complete the process of the migration also, but for redirection of Paytm payment handle, it will be to the Yes Bank. So it's just one day before the deadline of 15th March, National Payment Corporation of India has given approval to Paytm for third party payment application because under the Paytm bank license only UPI payments were happening, and after the restrictions now Paytm UPI payments will continue.
Okay, Anurag, do stay on with us. And moving on to the exclusive that you have also, where sources are telling, ET now about the SEBI board that will be meeting to discuss various norms as well. The board may actually discuss some bit on the mutual fund stress test as well, T+O cash cycle, and other details are also there. Anurag, what are these other details? What is this discussion mainly going to cover?
SEBI board meeting is scheduled for tomorrow, and a lot of announcements are expected in tomorrow's board meeting, mainly focusing ease of doing business, ease of IPO norms. So one of announcement is expected related to the minimum promoter contribution limit, which is 20%. So SEBI may give more avenues to comply on the 20% limit. Other than that, if the issue size of IPO gets changes, presently the rules are that if issue size gets changed, new DRHP gets filed, but SEBI may give relaxations that if issue size gets changed, new DRHP not necessary to be filed. Other than that, presently the rule says that 1% security deposit is necessary, 1% of total issue size security deposit is necessary. So there also relaxation is expected in SEBI's board meeting. Disclosure norms, additional disclosure norms for FPIs also are likely to be relaxed, where minimum public shareholding is not getting impacted. So SEBI is likely to give relaxation for FPI disclosures also. And one major announcement which is expected to be taken up in the board, which is a T+0 settlement, means that if you are buying shares today, it will get debited in your account same day, and if you are selling shares, you will get money same day. So although the timeline has been announced, but this matter will be taken up in board to get the board approval. And lastly, the few announcements are likely to be related to AIFs, liquidation of AIF, some sort of relaxations in REITs and InvITs are also likely to be announced in tomorrow's board meeting of SEBI.
Thank you so much for that, Anurag. Let's move on and talk about, Zomato, which is going to be in focus. Why? Because Zepto's platform fee has now come into place as well. Last month we had spoken about how Zepto has started this new membership program that they were talking about as well, a monthly subscription plan that they were talking about. And now what we are understanding, Zepto has started charging platform fee also. So yes, other than the subscription model, what has changed is that platform fee started coming in from Zepto in certain markets for select users. Now the platform fee, what Zepto is going to be charging is going to be ₹2 per order that is introduced as well. And Zepto is a quick commerce player, let's not forget that, which is in terms of a competition that comes into Blinkit as well. And when you talk about what actually comes in, this introduction of similar charges by Blinkit may come in to boost the profitability. We could see sustainability of the same is going to be something that is going to be key to watch out for. And quick commerce still is at a very early stage in terms of when you look at the overall market as well. There's a lot of competition which one could see increasing in this market is still high. very, very high as well as when you look at it in terms of platform fee of ₹2 per order charged by Blinkit to increase. So the EBITDA by 34% of Blinkit, and that will increase EBITDA of Zomato by 3% as well. So yes, that's how it would work out for Blinkit and Zomato as well. Keeping an eye out on that one. Platform fees are something that is charged on per order, irrespective of the order amount. So keeping an eye out on Zomato today on the back of this platform fee coming in from Sept.
Alright, well, interesting news flow coming in from Zepto and Zomato both. So we'll be watching out for Zomato. But viewers, with that, it's time to slip into a short break on this edition of Market Cafe. We'll be right back with more news and updates. Thank you. Hi there, welcome back. You're still watching Market Cafe on ET Now. Now, big day for mutual funds today because multiple AMCs will be declaring their stress test reports. Some of them have already declared them last evening as mandated by SEBI to protect small and mid-cap investors. You have the likes of Quant Mutual Fund, Aditya Birla, DSP and Edelweiss have all passed their tests. So my colleague Sharad is joining in with more details about the stress test of these four companies. Sharad, good morning. Take it away.
Well, yes, already we are seeing 4 AMCs actually declaring their mid-cap and small-caps stress test. So basically, this is the liquidity and how much time it can actually liquidate the stocks in the overall schemes. Now, if you're looking at the numbers, ABSL MF, DSP MF, Edelweiss MF, even Quant MF, all of them have actually performed well when it comes to the overall liquidity stress test. Now, of course, importantly, these concerns have been coming in from the SEBI chairperson over the overvaluation concerns, and because of this, the March 15th has been set as the entire date where all the AMCs will be coming out with their stress test results. Now, importantly, do remember that the liquidity schemes is there, which will be coming in every 15th of every month. So now this will become a monthly affair. Apart from this also, let's look at the inflows, how it has actually happened over the period, over the last 6 months. If you look at the inflow in the schemes, they have been very strong. And over the 15th straight month, if you look at it, the numbers have been strong for the mid-cap and the small-cap flows. But the question remains is, which are the largest schemes, especially in the small cap segment, which would be in focus, where the most exposure is coming in. We are having Nippon India HDFC Mutual Fund and as well as SBI Mutual Fund, which are having a highest NAV going up more than 25,000 crore each. And even if you look at the 1 year return, that has been very fabulous when it comes to the overall small cap schemes. So that is something which we'll be looking out for. And the most owned companies in the mid cap mutual funds, if you look at it, these are the 3 top names. And also if you look at the small cap names also, we are having Z and JB Chemical Pharma and also CG Consumer Electricals making it to the list. Lastly, also the cash pile of the top mutual funds, if you look at it, that is also coming at the healthy 4.6%. That's roughly 91,000 crore rupees.
Thank you so much for that update on the mutual fund stress test. But you know, we did have Nippon Mutual Fund also, which came out this morning in terms of the stress test that they highlighted. The fund house said that it would require 27 days to liquidate 50% of their small cap fund portfolio and 13 days to offload 25% of the assets. So yes, that's what we're keeping an eye out on. But Gaurav, let's take across to that for in terms of brokerages. What are we keeping an eye out on?
Well, yes. First, let's talk about Westlife Foods, because Investec has now initiated with buy rating and a target price of 923 rupees. So what they believe is that there is an attractive market potential for the company to grow, and on back of this, we may see PAT growth of 43% on a CAGR basis for the next 2 years. And apart from that, if we also look at the company's strategy of the store expansion and same store growth opportunities, that also looks attractive, and that is why we are seeing some kind of bullish view coming up from Investec on Westlife Foods. Let's also talk about Info Edge, because Bank of America has now maintained underperform rating but has increased the target price to 4,050 rupees per share. What they believe is that we have seen strong traction in 99 acres, and if we talk about Naukri also, we are seeing some kind of uptick coming up in this segment also, but it will be a little early to call the turnaround strategy coming up in Naukri. We have also seen the company delivering some companies like successful companies like Zomato and PB Fintech, but Bank of America believes that it will be a little, it will take a little time for Info Edge to deliver such companies in the coming time, and that is why we are seeing some underperform rating still maintained but high target price of 4,050 rupees per share. Let's also talk about Varun Beverages, because Motilal Oswal has now maintained buy rating and a target price of 1,600 rupees for the stock. What they believe is that there are three strategies that the company is focusing on. First is the capacity expansion. They're expanding the capacity almost by 45% versus what it was in 2022. They're also improving the distribution network, and lastly, they're also going into new geographies, and these all strategies are going to help the company grow its CAGR at 28% for the next 2 years, and that is why we are seeing some kind of bullish view coming up on Varun Beverages as well from Motilal Oswal.
Gaurav, thank you so much for those details on the brokerages. But with that, we are absolutely out of time on this edition of Market Cafe. So goodbye from Singh, myself, as well as the team who put this show together.
If you like this video, then like, share and subscribe to ET Now.